Hi everyone, it's Jeremy. Just want to do a quick update on US 30-year Treasury bonds. Why is that important? Because bond markets have 3 times as much money globally in them as equity markets, and I think it's part of the reason why the equity market has been fueled higher is because the bond market has been collapsing. So worth doing a quick look at the bond market just to see where the biggest pool of global funds is at. Obviously had an enormous sell-off coming out of 2016, and at the low was in fact extremely oversold, so much so that both of the monthly pivots were well below the lower quarterly pivot. So we do have a long-term bearish bias on bonds, and just recently seems to have been rejoining with that major bearish quarterly trend. At the low, majorly oversold. All the weekly lower pivots were below the monthly pivot, caused this reaction up. Interesting when we look across the last sort of month and a half, we had a bullish weekly close here, and since then the market has honestly just been oscillating between the upper and lower pivots and hasn't been able to close below since, although this week it has just had an attack at that lower pivot. So a weekly close back under here is going to reintroduce weekly time-based weakness into the 30-year bonds. So watching that with interest. That's probably going to coincide with US equities closing above their weekly pivot, which would kind of lend itself to more of a rally in equities and or a sell-off in bonds. But I don't want to jump the gun again. Let's wait and see where it closes this week. In terms of midpoints, we see the weekly yellow midpoint very tightly around the monthly yellow midpoint and last year's close, which is the white dashed line. That's why the market has been range bound. When you get midpoints close together from different time frames, the market will just rotate around them while the market wants to work out where it wants to move on the higher time frame. But the biggest time frame bias is still down. Looking at support and resistance. A support down at 1483. Okay, so they're the major levels to the downside. Above, there's a minor level here at 153. So long-term bias is still bearish. Watching for that weekly close now to see if we can get the next leg down in bonds. Can go either way, but don't forget the highest time frame bias is bearish at the quarterly level, and that was evidenced by, and I'll just put it back up. That was evidenced by the close under this lower quarterly pivot. You can see there's the upper one, here's the lower one, so bearish longer term.